Welcome to Beyond the Check, the first industry podcast related to Web3 fund investments brought to by Block Sapiens, a leader in fund of funds and venture capital investments. We bring you exclusive interviews with industry experts in private equity, investment banking, business sales, and startup founders' insights. It's our mission to provide clarity to the industry and lift the boundaries of tech investments. In this episode, our host Gauthier Pons de Vincent, managing partner at Block Sapiens, we will deep dive into the crypto market and the state of fundraising. We welcome our guest, Karan Gandhi, investment associate at Cypher Capital, one of the leading Web3 VC funds in the UAE.
Hey, Karan.
Hey.
Hey, how are you?
Good.
Good. Yeah, thank you so much for joining today. It's great to have you. Having familiar faces from Dubai, it's always a great time with you.
Thanks for the invite.
Yeah, of course. I mean, we've been like in touch for a long time now.
Yes.
I have been following Cypher for a long time. Yourself, obviously, we've met a lot at events around Dubai, internationally. We never really talked about like your background and where you came from. Obviously, I know that you have some experiences in traditional, in TradeFi, but obviously, like most of the people in crypto, we'd love to understand a bit your background,
Sure.
where you came from, and also what brought you to crypto itself.
Yeah, sure. First time we're having this conversation, going deep dive about my background, but happy to share. So I'm always been here. I'm born and raised in Dubai. Yes, you're right. My background has been mostly in TradFi. So I started my career pretty early at the age of 17. I started working for a local bank. I did a couple of years of banking, and then I had some interest in equity trading. So I worked for a hedge fund out of Dubai, trading the US markets. In the end, I realized it's not for me eventually. So I was always looking to kind of get into the alternative side. Fortunately, during that time, I actually cleared CFA. So it was like a very big breaking point. I think I was 22. And I got an opportunity to work for one of the largest family offices from Oman, investing for them across Middle East, Africa, Europe.
Nice.
So
Venture in early stage as well?
It was a mix of both. Like it was off-plan green investments, and then there was like pure PE, and then there was a small chunk of VC as well. But the VC part was like predominantly on emerging markets. But at least that company was like a very good platform for me to learn and grow. And I had like lots of funnels as well in that company. Worked with them for like over 3 years. And that really got me into the alternative space. I think that role, working for the family office, kind of exposed me to a lot of upcoming opportunities. And during that time, I was thinking that how do I navigate my career path? Like I've done like banking now, TradFi a bit, trading a bit. I did work for a family office as well. And I think the only missing part there was like I always wanted to be an operator as well. So I ended up joining one of the leading venture studios out of Dubai. Like basically now it's one of the biggest Middle East studios. And I was building a startup for one of the regulators out here in the Middle East. And that got me exposed to a lot of how to do things, how to build a startup, going from hypothesis testing to MVP to actually building something. Which
is very different. We know
like,
that, we know from our side, we work a lot with funds at Block Sapiens, but we're also a company. So building a company is completely different. And we understand that, sometimes fund managers want to have a hand and try out the operational side. It gives you a hedge, and you understand also like how founders think as well. I
love the 0 to 1 angle. Like, sometimes I feel like I'm more suited to like -1 to 0. Like, at ideation stage, I come in and then just put my...
I've never heard of that actually, -1 to 0.
Yeah, it's like my new... So, majority
in
of
crypto maybe.
In crypto, maybe we're -5 to 0.
-5,
just like start from anywhere, right? But... so that opportunity was really interesting, and I've been in crypto for a while, right? So I got like dwelled into this whole space, I think in late 2017. It was out of accident. Actually, one of my friends told me about this coin called Ethereum, and he's like, this is the next big thing. And I was like, what the hell is this, man? Like it's a virtual currency.
It always comes from like random people that come and like a taxi driver or it's crazy how like crypto comes from like anywhere, not only like
It's crazy, and at that time, like, it took me a while to get to the whole space, but I did enter in 2017. I did mostly in ETH at that time. I was just understanding the space and trying to figure out why this industry exists. In 2018, we all realized that it might be a scam also.
I mean, with the cycles for sure, you lose.
And I think that was a very good tipping point for me, to realize that I think I need to learn about this industry a bit more, take informed decisions, understand how things work and why does it work. And that 2-3 years from 2018 to almost post-COVID, I was just in my zone, looking at stuff, reading things. Of course, white paper research and everything else was common. But I think my biggest learning curve has been Reddit and Twitter threads. A lot of learning.
Big sources in crypto. I mean, that's what actually makes crypto different than traditional finance. So you get information from, like a very popular, I would say, source of information. Sometimes it's very hard to find like the right information. That's why you have to do a lot of research, right? Do your own research.
I think you still get a lead on Twitter or Reddit, and you can follow through that sort of narrative and understand a bit more. But then during those years was like my inflection point that, yes, I want to explore the space a bit more in detail and actually work in the industry, probably either as a VC or an operator. And I was always looking for opportunities, and I think Cypher was like the best podium for me to get in.
Yeah, actually coming to that, like I'm very curious. Obviously, you said that you grew up in the UAE, so it makes sense that you could have gone abroad. But very, very curious to understand like why Cypher, why you decided to work with them, and not because there are a lot of VCs in Web3, a lot of good VCs, and why Cypher, and like why the Middle East? What do you see?
I think Middle East, the answer is, of course, it's the place to be, right? I think regulatory aspects, it's very flexible. There's so many new frameworks coming out here that are going to be supportive to this industry. So no doubt. And of course, the space is growing enormously. I can give you one example. In 2017, there was this meetups that was held by one of the guys I know. He's a blockchain guy. He's like, I think, top 100 coin today. And at that time, he was just figuring out what startup he wants to build. So he hosted one of the meetups out here in Dubai, just talking about blockchain. This is 2017 late days, where people were 1 in 5 people were in crypto, and then 4 out of 5 were like thinking this is a scam, right? Those are the days that you're looking at. And at that time, I would say the ecosystem was not that big. And looking at now from the last 6-7 years, the ecosystem has like boomed out here, right? For Web3, so many founders moving into Dubai, a lot of tech talent also coming in, but then, there are like projects that have already raised significant amount of capital that are moving into Dubai because this is like a good framework for them to operate from. But why Cypher? I think when I interviewed for Cypher, and that time we were setting up a new team, the vision and the mission and the ethos of the company is like brilliant, right? They had already raised capital from just to give you a background about Cypher. Cypher is a solo LP fund. It is backed by one of the founders of one of the largest mining groups in the Middle East. And the entire fund, which is 100 million, is funded by that guy. So we're basically managing money for a solo LP. And I think earlier in 2022, Jan and Feb, they were like out there to set up a whole proper team to build an investment structure and then actively invest. Though the fund was already investing from early 2020. So we're talking about Jan, February 2023? 2022, okay. Because I was surprised that you said early Jan, Feb. I saw you guys, very, very active actually the last 2 years. But it always starts this way. I mean, we see a lot of fund managers that starts their journey in investing without necessarily raising a first fund, just to build a track record, right? I mean, if you want to raise a first fund, it's hard to come to investors and just say, we're great guys, we have no track record. Totally. So that's super important. And I think at that stage, for me personally also, it was very clear that I want to be in this space. And at that point, I'd already dwelled a lot into token research, tokenomics. Also, I was doing my own independent analysis as well. Even if I was not working for a fund, I was capable enough to, understand how the tokenomics work, how the coin is, what's the use case, narrative, where it's just go, understanding liquidity aspects as well on DeFi.
That's the public equity side that stuck to you.
A
maybe.
bit of that and a bit of curiosity, I would say.
Yeah.
Just blended together is where kind of my interest was. And it was like the perfect timing. So Cypher was setting up its own team. I was actively looking for opportunities in the space. I had already like done a lot of work on just looking at how things are. And eventually, of course, Cypher Capital as a fund had this whole ecosystem play as well, which we have been actually executing now. Like if you've seen the hub and a couple of other things that we have, and I can definitely give a brief. In the beginning, the ethos was that we are a VC fund, but we just don't want to stop and like restrict ourselves there. We want to build an entire ecosystem. Wherever value creation is possible, we should be part of that whole chain.
Okay.
And today, I'm very confident to say that we've actually executed the entire portion of our strategy in building that ecosystem. Okay. So when I was told about this whole opportunity, I think I was super excited. And I think at that time, in 2022, there are not many funds as well. Of course, over the years, we've seen so many funds come in.
Yes.
But as a 100 mil fund, it's still like one of the largest funds out here.
Definitely. Out of the UAE, for sure. Actually, like what you said, I mean, I'm very familiar with what you're saying, because, I mean, we've been working in the fund business before, and actually in 2022. So we saw a lot of funds coming from the US, basically trying to find capital out of the UAE. A lot of them failed, some of them succeed, obviously depending on the brand they have behind.
Right.
An A16Z that come to the Middle East obviously is most of the time successful. But yeah, in terms of like the local funds, there was way fewer. Now we see a bit more funds out of the UAE because of, like what you said, the regulation.
Right.
We had this discussion also with Julius from New Tribe, and now it makes sense for those funds to set here.
Absolutely.
Yeah, but also I'm very curious to understand. So you talk about the ethos of Cypher, and I would really be keen to understand you're an investment associate there. What's your role there? You talked about research, and we'd love to understand like what's your role there. Sure. What do you manage? What's your daily job at Cypher Capital?
Yeah, happy to share that. So as a team, right, we're not a very big team. We're actually 15 people, and in the investment team, around 3 people just like managing the entire fund. So like my day-to-day role involves, of course, screening opportunities, speaking to founders, of course, and also narrowing the vision that we want to or mandates and sectors that we want to tweak. Overall, Cypher is an agnostic fund, so we actually look at everything on a day-to-day basis. But I would say, just to break down my time, I would say 20% of that would be in screening, 30 to 40%, let's say 40 would be in just speaking to founders and doing deep dives and research and analysis. And the balance is a mix of execution, deal management, due diligence, and a small chunk would be like networking and social aspects of how.
But isn't networking a part of like speaking to founder, I would say? Because I mean,
true. Yeah. I think in this industry, right, what's funny is that it's always a hybrid. Like, a lot of things in the Web3 space are hybrid. Like, 50% active deal management, hardcore stuff, probably the boring stuff for the audience, but the hardcore core stuff, research analysis, thought-driven insights, and then the balanced portion of your sort of role in a Web3 fund is always networking. Going to events, meeting people, and doing a lot of other things. But yes, speaking to founders is definitely a chunk of a good portion of networking. I think for me personally, a lot of projects that I've invested in, and if I'm be able to add a lot of value, I do see a lot of return coming back. A lot of founders do give us leads as well, and sort of deals that are in this space, and it's helpful, right? I mean, at one point we can't be everywhere.
Well, I guess like deal flow is there's a lot of once you have a brand as a fund, you have a lot of inbound deal flow coming from everywhere, and but I think in the meantime, what would make you maybe a bit different than other funds is do some like outbound sourcing, because you
do that.
You find you find blue chips, right? You find things that people don't find, and it's what I've seen a lot with you actually. Like we met at different part of the world, like in Singapore, in like Paris,
almost every event.
I was back home in Paris, and I go to this ECC, and I saw you there, and I was like, actually they're very active, going everywhere. I know also Vinit is very, very also active. He's in Saudi Arabia. I've seen like you guys
Vinit
traveling.
Is like our social capital.
Yeah, he's
always
social capital.
Everywhere.
Definitely looks like that, like it. But I'm like now I understand more like how you balance. I guess it's very important to be able to balance. Venture capital in general, like I think fund managers are very out there. So there is like the time management that's very compared to like PE, for example, where you're always in the office. Yeah, you never go out. And even family office, you mentioned, like I used to work in a family office. I liked it. You do a lot of research, you learn a lot.
Right.
But sometimes, you want to meet the people. And in crypto, I think people want to meet even more others because there's like a really lack of some type of trust. I know it's an industry that tries to put trust, on the rails, but there's definitely lack of trust. So you want to see the people. You want to 100%. See that you're So I think that's why crypto is a bit more.
I
social.
think also like a very important aspect of meeting people out here. One is that Web3 is collaborative because of the nature of how this industry exists, right?
Yeah.
We are. Every segment in Web3 is evolving at such a rapid pace. It's hard to keep up.
Yeah.
And your network and your connections in the space and people that are sometimes a very good source of information of what's happening in that specific segment. And we were just talking about outbound. I think Cypher does both, right? So we do get a lot of inbound as well. But then because we've invested in so many companies since 2020, we do also speak to our founders on a consistently basis. So we also get to know what's happening in their industry and in their category. And if there's any other project that they are looking at or any of their friends who are raising as well. Actually, in terms of like real conversion, those leads are really high quality. Yeah. Because of course, the founders that we work with, they already know what we are usually looking for. Mm-hmm. So I would say that a lot of screening is already done at that level. And it's super helpful. But yes, I agree to your point. I think networking, going out to events, meeting people, I think it's all closed end together for access, for building trust, and also just building your network over time, so that this collaborative nature kind of coexist and you're able to get things done.
Definitely, yeah. And also just to add last word around that, like I think in the UAE itself, since it's a rapidly growing market, and a lot of people are coming.
Right.
So you need to filter. Like it's not like Silicon Valley where people are there, and you see a lot of people in crypto that's been in the last like the .com bubble. So it's easier, the people. In Dubai, you have a lot of new people that are coming in, so you need to filter a lot. I think a bit more than.
I think it's relative, right? So in any sort of sector or industry, right, you'll have people who are sort of obviously trying to get in, trying to figure out, are in discovery mode, and maybe I think the distinguish between what we feel is a very good meeting versus someone that is just on an exploratory mode is where we feel that okay, this person might not be a good connect or might not be great to meet up, right? But I think the way I look at it is I'm always open to meeting people, right? You've seen me in events.
Yeah, for sure. That's for
always out there speaking to people, just trying to understand why they are in the industry. I think one of the questions I always ask anyone that I meet, right? Mm-hmm. Like I don't want to know what you do, right? Okay, I know that you work for this company and this is your role. Yeah. But who are you? Like, what is your background? Like, why are you in this industry and what excites you? Yeah. And where do you want to go? Because that's a very critical question. I think this is something that I also ask founders as well.
Ambitions,
why they are building this, right? Because I think a lot of, say, people are entering this space out of speculation that yes, I'm going to turn my money into like golden road, right? I'm going to convert it from 5x to like 100x, right? But I think in the end, this industry is so nascent at this stage that these questions really help understand what's your drive, why you're in this space, right? And that's why we are pretty open, just meeting people and just chatting up. I do nowadays filter a lot of events as well, so I don't have the bandwidth to go to all the events, I'll be honest.
And you have your own event as well at Cypher Hub, so it's like you cannot manage everything.
So it's more easier to filter it out, but if I'm at the event, then I'm speaking to everyone, that's no problem.
Yeah. But I'm curious also like to understand, just going back on Cypher itself and the strategy. You said that you guys are agnostic. So I understand the term agnostic in crypto, but like you said, there's a lot of different trends. And since you guys have a smaller team, like you mentioned, obviously it means that you need to be multitask. I mean, like for example, yourself, you need to understand different subjects.
Right.
So it might be difficult to there might be some subject where you're a bit less, comfortable than others, right? So
100%.
Yeah, I mean, like very hard to be agnostic. I guess it's easier if you have one LP than if you have multiple LPs that are asking you like, what are you doing, right?
It's true. I think the way we run down sort of our mandate, right, is we do both. We do a top-down and a bottom-up research.
Yeah.
So I think over the years, I think this is also my personal learning as well. The way this industry is shaping up, every sector is getting a sub-segment coming.
Yes.
And that segment is also evolving at a rapid pace. So, over the years, say in 2017, 2018, we probably might have 4 or 5 segments like infra, DeFi, gaming. I'm not sure, it didn't pick up by then, but
okay.
But today, even in DeFi, you have like 10 categories, right?
Yes.
Like lending, borrowing, yield management, LST, and a couple of others, right? And derivatives as well. So what we've been doing internally at Cypher is that a lot of projects that are on the application layer, we do bottom-up research because we are taking a bet on the infra that's being built on and also the project itself. But then on a broad overview, we already have our research made and like analysis done on every category and how much risk we want to take on each sort of segment. So that makes it super simple. Like if we've taken a lot of exposure on gaming as an example, then in future, we probably would not be looking towards more opportunities there because we already have enough in the portfolio. And that really helps us manage our sort of pipeline in a way because a lot of screening is done at day one, right? So before we end up getting on a call with the team, if it's not in the category that I'm excited about or it's not something that we are looking at, we just...
makes sense. You apply your strategy. It makes sense. You mentioned a lot of like you guys do a lot of bottom-up research. How do you, on the infrastructure side, how do you do? Because you have a background more in finance, and I can see it because the way you talk about managing a portfolio, right? And like the exposure and the risks, that's very important. But on the tech side, how you guys analyze the tech side, which is like, very important in Web3. It's not the most complex one, but very, very important.
It's part of DD. So we have like an internal tech team as well. I think we've got really strong engineers who do tech deep dives. So I think a lot of funds also like request founders or like require, actually not request, but founders to have like audit done and a couple of other things done. But I think at the ground level, if you're an investor, you have to have a tech team to understand.
For sure. In tech, at least in the tech industry.
Yeah. So I'm a finance guy. So I would say I am a tech guy, but I'm not a technical guy, right? So we have a technical team.
It's a good one.
Yeah, I'm a tech guy, so I understand things, but I have a technical team and like a engineering team that looks into the project in deep dive. And we also test the code. We try to build something on it if it's pure infra.
Okay.
But if it's generally like a middleware solution, then we just try it and connect it to our plugs and see if it works.
Okay.
Overall, I think the tech DD part is almost like a stage 3 of discussion. We've already been very clear that this market exists and there's a big target market for that product. Then when we go ahead in the DD side is usually the tech review that we go through. And we have a whole tech team actually comes on the call, so it's just easier. Which
makes sense. I mean, I completely agree with this sort of process because for one reason, is that a lot of people are building a tech. A lot of people are very smart on the tech side. In crypto, especially, they have no business model, and it's like it's good to build like a great tech and everything, but at the end of the day, how you're gonna commercialize it? You're an investor, so you look for return on investment at the end of the day.
True.
And it's this. I mean, now it starts slowing down with I would say the market picking up, but during the bear markets. For us, it was very difficult because, we see also a lot of deals coming through.
Right.
And we were like, and people that need help. So sometimes we were like, we can't really help you because just fundamentally, like, you have no business model. And so there's no way we can justify that with investors. So that's a big, I like the process of, starting by that and then look at how the tech works.
And I think, generally speaking, like even if you're doing a tech DD, right? as an investor, like you have to be comfortable with all the other bits, right? Like the team, their background, execution pedigree, of course the narrative, the use case, and why it makes sense, and a lot of commercial sides of token and token utility and other bits. And once you're convinced that okay, this exists and this makes sense, then it's better to do a tech DD, because there's a lot of time that goes in reviewing tech, and you know how fast-paced Web3 is with investing. Sometimes it might just take 2 weeks just to do a tech DD, or like 1.5 week, and then the deal is already closed. So we prefer to bring our tech team on board when we're just committed. So
it was a big issue actually during the bull market, like deals going way too fast. I mean, I always talk about FTX because it's like, because there was this, I think it was Naval Ravikant, or I don't remember, that was saying like, they were trying to push them to invest in FTX, and they were like, hey, if you don't have the access to all the statements, the internal information, and the board of directors, we can't invest. And they're right, they didn't invest because of that.
True.
So many people like FOMO'd, and this is one example. There are a lot of them.
This is so common, right?
It's a big issue. I mean, during bubbles, I would say.
It's the same thing, right? It's all about speculation, right? If everyone is speculating, then they would just not take like informed decisions, right? And that's why it's super important to follow a process. Like for us, like, even if it's like the best deal on earth, but it doesn't, qualify or doesn't pass certain of our sort of mandates, unfortunately, we just can't invest. If it's FOMO, not FOMO, I think as an investor, you have to be sensible and take your risks accordingly, right? And that's one bit about this industry, that speculation and hype drives a lot of capital to certain segments. And it'll happen again, right? I mean, once the season comes back,
it might happen
we'll see
again.
one sector just boom, and then every sort of the entire liquidity is like pushing out there, but it's part of the industry.
Yeah. And on your side, do you have any like, obviously you spoke about Cypher being agnostic, but on your side, is there anything that interests you more than other stuff? What are you hyped about at the moment? I mean, hype. It's not necessarily the word. I would say interested, because obviously we don't want to be FOMOing on the tech. But yeah, if there's anything you're.
So, I think one thing about just investing in Web3 and how your strategy changes between a bear and bull is that in usually a bear market, most of the VCs fund a lot of infra companies, right? Because it's time to build. You have like 2 years or like couple of quarters away from a next season, so you have like enough time to build and deploy, and of course build the business. And I think as soon as we are coming towards the next halving, infra is going down and application layer is going up, right? So personally, I'm more bullish on projects that are really solving a use case and real problems, right? Like not the jazz that everyone talks about, right? Yeah, bring a use case, let's make it work. No, I mean, I want to see real impact happening, specifically with application layer. And I always say this, like, at this stage of crypto, and specifically with infra, we've got the highways, but we've got no cars. Right. And that's a deep statement, but the reality is that, you've got the entire infrastructure, but we need application layer to come. We need projects to be built on existing infra. And then of course, more tech will come in, more innovation will come in with scalability and other solutions. But a couple of industries, or let's say not industry, but sector that I'm excited about is definitely Deepin. I think Deepin has got a very high impact. It's highly scalable. And RWA is now the new trend. I'm still like exploring that. I see some pros and cons there, and I'm not fully active there, still hesitant to explore that, but we're still actively looking at RWA opportunities. And
is it new though? Because I mean, like, it's a long time we speak about it, but I would say maybe like what you said, that now that we built the highway, maybe we can start using what we built.
I feel RWA is just like one small piece in the whole equation, because it's just attracting or just actually pulling DeFi liquidity, right?
Yes.
And that's like a pull, not a push. I'm looking for industries or segments that are pushing the Web3 further. And if you just look at, this is true, like RWA has become like the talk of the town. Everyone is talking about RWA and other opportunities there. And I feel like, eventually if RWA really kicks in, we're going to reduce a lot of liquidity from the DeFi markets.
Yeah.
Maybe liquidity can come, but this is the whole sort of thought process that, this might help bringing in more liquidity. I feel at this stage it's just pulling more liquidity, at least the projects that I've seen. And in perspective of the other sectors, I think Deepin I mentioned was super interesting, similar to Helium and Hive Mapper. Actually, I'm probably one of the first Hive Mappers in Dubai.
Okay.
So just for context, Hive Mapper is this decentralized mapping company that you've got a camera, you basically, mount it on your dashboard, and then you drive around and it just clicks photos and stuff. And it aggregates all that data and creates a 3D map.
Okay.
And that's like one example for me why I'm excited about Deepin, because I'm seeing real impact.
That's definitely a real world use case.
Yeah.
But like, the question is like, when you have those kind of real world use cases, like, do you really need the decentralized aspects of it? I mean, yeah. Do you think it's? I mean, for example, in this example,
right?
With the 3D camera, what would be why it is essential for this use case?
I think the way, just talking about Deepin in general, and like just specifically about Hive Mapper, since we're chatting about it, I think the way Deepin is going to grow over time is going to be phenomenal. Like in general, I feel that the power of decentralization and ownership, like me mapping a certain portion of the map and like allowing that camera to upload it on the main data map, versus a centralized company doing the same thing, like Google, right? Doing the same thing, spending maybe, if not billions, but millions, right? In that whole ecosystem. Decentralization is much more scalable. It's much more rewarding. You have benefits of being a participant in the whole ecosystem, and that's my eventual view of being in the blockchain industry. I feel like big corporations in the future will not be run or operated by centralized authorities. It should be operated by decentralized authorities, or maybe DAOs, I don't know, where every participant has like a right to say in some form of vote, which we still do, right? If you buy an equity share of a big tech company, you still are allowed to vote, right? But then the inclusion is not enough. The power of decentralization, where your voice is heard and you are really impacting that whole ecosystem in some form, is where I feel there is a big opportunity, right? And in general, you cannot do it without decentralization, right? How would you reward users without having a sort of a blockchain infra in between?
Oh, that's right? For sure. For the reward aspects, you definitely need. I mean, you can have like central entities. I've been in crypto for much less time than you. I mean, I've been very interested in the tech itself. Sometimes I lost a little bit the faith because of seeing like actors, for example, like Elon Musk, that's trying to push blockchain technologies, but in the meantime, like he's very like the way, for example, he's leading Twitter, is X now. He's very like centralized. I mean, he decides everything, and so sometimes it's a bit like is it like really is it really happening? The decentralized aspects of things.
It will take time. I think any industry that comes up, right, the first couple of years are always like, I call it the Fugazi moment. Like, just anything is happening. People are making money, losing money, trying out new things, experimenting in general, right? And I think at one point we'll come to a phase when it'll be the time for only real tech to work, or real use case to actually survive in this industry. And we're not there yet, because we still see a bunch of meme coins. We still see a bunch of random projects launching, right? So I think we're still not there yet, and it's early, but one day we'll see a proper framework or a secret sauce of, founders following that pathway for a launch. Today, there is no secret sauce. It's all about building an economy that works, allows the participants to contribute and make money, or like get rewarded in some form, and you have some sort of a value creation from each participant as well. And if you're able to successfully do that in a certain niche, it's a token, right? So I think we still are like a couple of years away from projects really starting to build a solid use case. We have few examples, but I think we'll see more to come.
Because you guys, I mean, just so I remember, you guys invest only in tokens and not in equity. So you have obviously a clear, opinion on the?
We have a clear opinion on decentralization and how the token economy is made. I think that's one of the key elements of any investor to crack in this space, right? That if you're able to sustain a very solid token economy, then whatever use case you build in, you can quickly scale it, you can quickly expand sort of your infra around it, and also expand globally very quickly, right? Mm-hmm. And this is like a funny example, but it's true. Hive Mapper, I think, is 1.5 years since it's launched, and within that period, they've already mapped over 10% worldwide global map.
Yeah, that's crazy.
Which is not possible if you're just a startup mapping.
No, that's for sure. Yeah.
Mapping the world. But I think for us specifically, we are token investors, and we very deeply look at how the token economy is built. We're still, of course, like we have a couple of models in mind how token economy should work, but a lot of cases is where we're just getting insights from the projects we invest in. This is how they've managed the economy. This is how much liquidity they've put in. This is how many, say, users came in, and how the economy works, right? Like a very basic example that I always say internally in the office is, we are investing in a currency, right? Yeah. And the currency needs to have a use case. It has to have avenues where you can spend and make money. Like we are recording this out of UAE. We of course spend the dirham here, and we've got so many services, right?
Yeah.
But we go and spend our dirham, we also make our income in the same currency. So that whole economy sustains itself because there is a give and take, right? Yeah. And the same thing with the token. If there is no users who are using your currency,
no, for sure,
there is no utility behind it, right? And that's why the stress on utility by investors.
That's one of the main discussion around equity versus token. Unfortunately, nowadays, I mean, there's still like a lot of companies that have tokens and equity.
Yes.
In this case, it's very hard to for founders sometimes. I mean, it's hard. It shouldn't be to explain like how the value is derived, because obviously there's the equity side, the equity holder, value derived to equity, and then the token that's there. Sometimes the token can take over the equity. It happened a lot in the history of crypto. How do you do in the case there is equity and token?
Right.
I mean, your company is a company, right? They need to have equity, right?
It's very simple, right? It's all about value accrual. And also the business model that you're working on. So if your business model is you're going to run a subscription service like a SaaS, right? Having a token would probably not make sense, because you're making recurring revenue which is coming on a certain date, and there's nothing more on that business model except your clients and your relationship, right, as a platform or whatever product. So there the value accrual for a token doesn't make sense, and equity play makes sense, right? And with token in general, of course, when we dive into more on how the economy is worked on and where the token is placed and a lot of other things, right? But in hybrids, as what you ask, right? Yes. Equity versus token, or hybrids, equity plus token.
Token warrants.
Right? I think we make it very clear, and one of our requirements as well, that if the project is eventually going to launch a token, we want to understand how would it happen and how would the value accrual shift from equity investors to token investors.
Yes.
I think equity today in the Web3 industry as for investors is more sort of like a protection for you, because if the project is going to launch a token, I think the entire value accrual should be in token. Yeah. But again, it's important to understand whether the token is needed or not, right?
Yes.
So the SaaS doesn't need a token, but an entire distributed or decentralized project might need a token.
Well, one also of the issue for you talked about security for founders, for example. One of the issue with the token as well is that you very quickly put your ownership of, I mean, it's like you will have an equity. Obviously, it's different. Token and equity are completely different, but you still have a bit of an ownership, because you can decide, you can have right of vote. But you put it very quickly on the market. We've seen like the equity markets becoming more, the secondaries more specifically, getting more liquid, with like more secondaries helping out, selling shares before IPOs.
Right.
It's happening. And maybe you will see like tokenized stocks. That's something that everyone is talking about, like before being public, being able to. But it can be very like dangerous. I mean, I used to study it when I was back in the family office because we were doing a lot of secondaries.
Right.
And it can be dangerous for the health of the company because they're still very low cap.
Nascent,
and it can kill, the
I think this all answers to my view on like how speculation works amazing in Web3, right? We like to gamble, let's say, right?
Yeah.
And
that's a big issue.
Degens got to trade, right? So I think that could also eventually become like a very big segment as well. But I think in the end, as an investor, if you are doing your sort of thought process or you're building your thesis around a certain project, we feel it's better to do a token because you could really like it helps in every aspect. It helps in like user acquisition, decentralization, scalability, creating sort of the impact that you want to create quickly. If you have a token, it does help.
Also, do you have when you come to invest in a token, do you look at like very closely to the other investors that are going to be on board? Because we've seen that there are sometimes investors that are not very, I would say, ethical. They tend to like dump the price of the.
I think the way we do our DD, right? It's part of our process to speak to either the lead and at least couple of investors on the round itself. I think.
Do you lead?
We don't lead.
Okay.
Maybe soon, right? But that's part of our process, and I think that's why this whole networking aspect and meeting people helps, because not always, but majority of the time we are already speaking to the other investor who has invested on the round, or if not, at least at the base case, we will check with the previous investor. Like on the previous round, the investor, what's their sort of relationship and how the founder has worked towards the expectations, and just get a background check basically. So in any case, we are checking that. So we do get an idea over time working with different VCs on how they think. And I think it's also about building trust. So the more code investments you do with other VCs, you automatically build the trust that we are in it together.
I completely agree. I mean, we do the same. We look at, just like you look at market makers, any other partners, even marketing partners. Like, you need to look at all of these things because they're going to be crucial for the development of a startup.
Right.
So obviously, you look at everything, including the investors. I think it's very important. I wanted to come back on the LPs. I mean, one of the investors you mentioned, the Phoenix Group. Actually, that they're the first blockchain company IPO doing an IPO in Abu Dhabi, right? If I'm not wrong.
Yeah, I mean the context is Phoenix Group is a data mining center company.
Okay.
They're right now one of the largest mining groups out here, and they've been mining globally as well. And apart from that, they have a lot of other verticals as well. They also distribute hardware, and they also have a cooling division. Yes, that's true. Your information is right. Phoenix Group is actually going through an IPO right now. And soon we will hear the news and the date that it's going to IPO at a very good number. And it is, so basically the solo LP is mainly the founder of this data mining group.
Okay.
And we're pretty excited as well because in the end, it's our investor who's going through an IPO, and it'll be the first one. So we're super excited that it'll be a very big thing for this region as well, and also puts in like a stamp that there is strong demand for the Web3 industry out here.
Yes, no, definitely. And I've been traveling a lot to Abu Dhabi, trying to understand obviously they're a bit more low-key than in Dubai, and I think that's why it's one of the reasons you guys are based here, because it's easier to talk with people and meet people than in Abu Dhabi. But for obviously like listing a company, it makes sense to be based in Abu Dhabi. Cypher is based in Dubai, right? Or
we are based in Dubai. Even the hub that we have is based out of Dubai as well.
Yeah, I've been to the hub actually. Pretty cool actually. But yeah, just to I think we are running out of time now, but just to finish up on I've been reading a lot of articles on talking about a lot of people from gaming moving out of gaming for crypto, a lot of the young talents moving to crypto, and I think we're some of them, and
Probably me as well.
Yeah, I think you're definitely one of them, and I think it's maybe it rings a bell for we work a lot on the LP side as well, so
right.
providing funds to funds that then are provided to founders. It's very crucial that we find obviously LPs,
Right.
not most of the time, like for example in your case, but yeah, most of the time you need LPs. Isn't it like for you like a signal? Also, like Bitcoin price now going up. Obviously,
Right.
It's market volatility as well.
Right.
But all those things, talents moving to the industry, Bitcoin coming back, and there's the halving coming in 2024. Are those not all signals for the Web3 industry to actually maybe a next bull run, or no one knows and everyone is like speculating around it?
Right.
But yeah, for me, it looks really like some different signals.
I think the main sort of view here is that definitely this industry is here to stay, right? It's very clear that we're going to be here. But all these signals, right, like, probably BTC halving and the launch of the ETF, the whole hype that we saw.
Yeah.
And a lot of people moving in from gaming to crypto and people flocking in to try out what's happening out here. In the end, I think we are aware that the market is going to stay. We will see a lot of price action, but for us as an investor, we always keep one step in our VC angle and one step as managing a hedge fund, right? I always say this, I think before the conversation, I also mentioned it, that Web3 investing is super interesting because you are 50% a VC, right? Primary market, illiquid. And then you're 50% a hedge fund because so many of your tokens are liquid. So you have to manage that risk accordingly and find sort of a balance between a bull versus bear. Yes. I definitely agree. I think there are a lot of signs that the market is going to come back probably post the halving. Maybe the ETF approval, maybe the halving itself is going to create a trigger point. But in the end, I think for us and I think for everyone else also to look at the space in perspective of what value can it create, right? I think we are 15 years now in this whole growth or start of this industry, right? From 2009 to 2023. And when you saw internet from 1990s to 2000, in just 10 years, we already had use cases. People were using Amazon, people were going online reading stuff, and there was some value being created, right? Today, we still have some value being created, but it's a lot of financial aspect of it. Yes, we need to see use cases, and, trading, speculation.
Yeah, that's what actually I always talk. I have a brother that is a founder in traditional AI, but since not with the bubble happening now since a long time now, and he always asks me, but what's the business model? Where the money is coming from? I say, yeah, well, there's a lot of money comes from VC. So that's why I mentioned, the business model are important. Unfortunately, we don't see it now, but maybe it's the time now. Maybe it will be the wave of a bit more adoption and just like sustainable business models.
It's super important. Otherwise, there's no point of this industry, right?
There's no business.
It might be just like a trading asset class. And of course, BTC has clear use case, right? Store of value and as a payment sort of currency. That could clearly see the upside. But all the altcoins that are coming in this picture right now, I think they need to really build on a sustainable business model. And there is no rush to launch a token, right? You can launch a token whenever you're ready, whenever you have the user base, you're very sure that your economy now needs to launch. I think a lot of founders think about the token first and then think about the business, right? Let me do 100x first and then think what I want to build, right? Which is not the right way of thinking about it. If you are able to identify a problem, you think blockchain is the way to go because that's where you can probably decentralize it, scale it, or do something else within the ecosystem. And if there is a need for a token, or if there is a need that you want to explore that side, then do it at the right time. I think in the first case is build a business. And I think you've seen that, right? Just gaming in general, in 2019, 2020, right? We actually invested in so many games at that time. and the product development in those games was just like phase one. Today we just don't proceed without doing a beta test, for example. So I think the industry is evolving, investors are evolving, the mindset is changing. It's going from a speculative mindset to more of a investor hodl mindset, let's say. And I think this will happen over time. Founders will also navigate towards that. They will also start building real use cases, because investors holding capacity is longer. They're asking for more rigorous work done on the use case. And eventually we're going to make it, right? But in terms of signals and trigger points, I don't know. No one knows the market.
No one knows,
we hope that it comes back. But I think if it comes back again, it should be more consistent. Because otherwise we're just investing in cycles, right?
I guess it will. We see that after all the cycles, even prices of Bitcoin or like things are stable, being a bit more stable. Even if compared to like traditional finance, it's still like a crazy moving. But I think things are getting more stable. But yeah, we hope we hope we'll get there. Now I think also like being here in the UAE, we see a lot of like implementation, and very happy to see that, and very bullish. So let's see what the future will bring. Well, thank you, Karan, so much. It's now we're running out of time, but thank you so much for joining us on Build the Check. It was very interesting, and I hope to see you maybe another time on the podcast.
Maybe in a couple of events.
Perfect. Thank you.
Thank you so much. Thanks for having me.
Thank you.
Beyond the Check is brought to you by Block Sapiens, a leader in fund and venture capital investment. If you've enjoyed this show, don't forget to subscribe and leave a review. Learn more at blocksapiens.io. While we take reasonable care to select recognized experts for our podcast, please know that each podcast represents the independent opinion of such experts only, and not Block Sapiens. We make no warranty, guarantee, or representation as to the accuracy or sufficiency of the information provided. Any reliance on the podcast information is at your own risk. The podcast is for general information only and cannot be considered legal or professional advice.